2016 over 2015 growth rate was about between 7 to 8%. 17 versus 16, it was 13.8%. And what we are estimating for 2018 full year calendar, Jan-December, versus 2017 is about 10-11%. So 2017 growth of 13.8 was on a lower base of only 7%, 8% growth that we had the previous year. And now last year, which is 2017, we had a slightly higher base. So I would attribute this more to the base effect. 2018 full year projection of double-digit growth, 10-11%, is a decent growth that we are going to see, which is on top of inflation, which is projected to be in the range of say 4 to 6%, and also GDP growth is in the range of 6 to 7%. Now, on both these parameters, we are seeing that the consumption is accelerating for FMCG industry in general. What is equally interesting to know is if you see the first quarter results that we have published from the consumer offtake standpoint. So we have seen that quarter one of 18, which is Jan, Feb, March quarter, versus same quarter of last year, growth was close to 11.2%. Now, out of that 11.2%, a major chunk was coming from consumption. 9% of that 11.2 was consumption-led, which means that volumes are increasing, which is a good thing for the industry. Why is it happening that way? Is if you go back to 2017 when, or maybe end of 2016 when demonetization happened and the GST was rolled out, largely around GST, there were certain categories where the GST rates were lower than what the earlier regime had. And then again, GST Council revised the rate downwards for a lot of categories towards end of 2017. In November, it was again downward revision. Now, the result of that is manufacturers have come up with many consumer promotions in the market, which is pushing consumption-led growth for the industry. And that's where maybe out of 11.2 of quarter one total nominal growth, 9% is coming from consumption.
So as the GST impact, like you said, is now tapering out and the distribution channel has in fact become more efficient because of this, how do you see the macroeconomic factors like the inflation rising or the oil prices rising, which are significantly different from what was there in the last year when markets were doing much better? So how do you see the play on consumption versus the distribution channel that is now, the supply side, which will be efficient, and then how will the consumption play out in that background?
Yeah. So on the macroeconomic factor, like you're right, I mean, inflation is something which is inching up. And we have seen in the last 1 or 2 months, from a 2% kind of level, it has gone to 4%, 5% kind of level. The overall projection for the rest of the year is also in the range of 4 to 6%. That's one side of it. But if you see in perspective of FMCG industry per se, so other factors are equally important. So GST rates that we just talked about, in terms of supply chain efficiency for the manufacturers, which is again, say, a tailwind that the industry is getting. If you see the other macroeconomic factors, whether it is GDP growth projections, or in terms of the monsoons, which is a big factor, both from the sentiments largely on the rural areas, and also in terms of the affordability, that's going to be on a positive side. So as we are speaking, 2018 is the third consecutive year when monsoons are going to be good. And this is coming on the back of 2 bad monsoons of the previous years. So sentiments are definitely on the up. Now, the other factor which is equally important is what happens to the overall production from the agriculture standpoint and the minimum support price. So there are various government initiatives also that are being talked about. Now, if they pan across in the right way, this will further boost in terms of agricultural income. So while it may have a sort of a indirect or direct causal effect between inflation and the higher money in supply, but if you see in totality, there's enough tailwind for the industry for an accelerated growth. And that's why we are saying that the overall 2018 growth will be in double digits.
Based on your projections for the next 2 quarters, how do you see the impact on earnings of major FMCG companies? Also, if you can give us, some projection on what would be the revenue growth for some of the FMCG companies in the market.
Yeah, so that's an interesting point.
Yeah.
So, and we are seeing a very typical cyclical pattern here. So 2017 first half, which is Jan to June. So starting of 2017, there was some sort of stress because demonetization impact was still prevalent in the market. So that was impacting shipment to some extent. And by the time that was being combated by the manufacturers and the trade, mechanism, the GST rollout came in. So as an effect, H1 of 2017, shipments were not doing very in a great way. Now that resulted in some bit of a vacuum in the trade pipeline, yes, which was created, which has actually created a low base of 2017. Now on that low base, this year when things are coming back to normal, the shipments will be showing a much higher growth because of the low base or the vacuum created in the trade pipeline. So we saw some of the listed companies' results also where the volume growth has been significant. Mm-hmm. Even revenue growth has been significant in quarter one, mm-hmm, which is Jan, Feb, March quarter. Now, going by what we saw last year, even in the months of April, May, June, a similar trend is likely to be continuing. So if we go by that, the shipment trend for April, May, June quarter should also be significantly better than what we saw in the last few quarters. Quarter one being an exception when it was already high.
Yes.
On the other hand, the consumer offtake did not have that kind of base effect of last year. Mm-hmm. So consumer offtake is going at a normal pace of maybe close to double-digit kind of growth, while shipments will be showing a much higher growth.
So if you're saying a single high-digit growth for the consumer offtake side, what would be your projection for the earnings, or say, let's be more specific on the revenues of FMCG companies for the next 2 quarters per se in percentage terms?
So while we may not be able to speculate there, but from the base effect of last year, if the same trend continues, I won't be surprised if the earnings release will be in double-digit growth for the current quarter also.
Over 15% would be a comfortable assumption?
So 15% was probably the number that some of the companies have, yes, clocked, and maybe some companies may be in the same league in the current quarter also.